Hi, everybody. Dave Cole here with EMX Royalty Corporation. I'm going to miss traveling to London to see everybody this year, but happy that we can carry on this update virtually. And thanks to One to One for continuing to advance this good show. We've always enjoyed that, and I know we have a lot of supporters that come to the One to One conference in London, and it's our pleasure to communicate with you. Please do reach out to us and arrange to have meetings and ask any specific questions that you'd like. I am going to switch to share screens here and start this PowerPoint presentation so we can get on with it. I'd like to point out that EMX Royalty Corporation trades on the New York Stock Exchange, ticker symbol EMX, and also on the Toronto Stock Exchange, ticker symbol EMX. We've had a very good run over the last 5 years with a 35% compounded annual rate of growth of our share price over that 5 years. When we look back at the history of EMX Royalty Corporation to the time that we first went public about 17 years ago, our compounded annual growth rate in the share price since that time is around 16 to 17%, depending upon any given day where the price is. And that's strong relative strength compared to other members of the sector. But I will point out that royalty companies in general have done exceedingly well as compared to exploration companies and development companies and producers within the sector. And that speaks to the fact that royalty companies and that royalties themselves are phenomenal financial instruments with immense embedded optionality, specifically commodity price optionality, which over the long haul works in our favor. And that's a topic today with increased fiscal irresponsibility on behalf of governments as they continue to print more paper, working in our favor with respect to commodity prices. And the outlook from here going forward, in my opinion, looks very good. But the very important aspect of optionality also that's contained within a royalty is the discovery optionality. And discovery optionality is where the value of any given royalty can just go off the charts. And there's a number of examples of those that are contained within our portfolio, but also other folks within the sector. The way that we accumulate royalties around the world is unique. The dominant number of our royalties within our portfolio were generated via the prospect generation business model, where we acquire large tracts of prospective mineral rights, add value by doing good geology, sell those mineral rights to an industry that's hungry for discovery opportunity. And we get paid in cash, shares, work commitments in the ground, and always a royalty on the back end. We've sold 18 projects this year. We've sold 50 projects in the last 3 years, creating all those new royalties. And it's a fantastic way that's distinctly accretive to build a royalty portfolio. To augment that portfolio, we do also buy royalties and royalty portfolios. And a couple of key acquisitions that we've made since I last spoke to you have been the acquisition of a couple of portfolios of royalties, one in Canada and one in Chile. Our strategic investing is something that sets EMX apart from our competitors within the space. Our strategic investing track record has augmented our treasury repeatedly in our history. We have a 40% track record, 40% internal rate of return after tax on invested capital within our strategic investments. We have a couple of key strategic investments on the books today that I think will pan out very nicely. And it's thanks to strategic investing gains that we're sitting in a very strong cash position today with as much working capital, cash and tradable securities and no debt in the company as we have raised in the entire history of EMX Royalty Corporation, in addition to over 250 mineral property assets worldwide, of which roughly 150 of those are royalty positions. This is our world map showing those positions. We're quite active in the Western US and now in Canada, in the provinces of Ontario and Quebec in the Superior Geological Province, adding more properties all the time, continuing to work these assets and sell them off part and parcel to our organic royalty generation pathway. Chile is a new place for us to focus, and we will be building on our portfolio there. And we've been a significant player in Fennoscandia now for years. We're one of the largest mineral rights holders in Fennoscandia, very delighted to see Goldline Resources go public today. That's a company that we own, I believe, 9% of the stock in. We have royalties on the majority of their projects. We sold them our portfolio of gold projects we have on the gold line, which is a multi-million ounce endowed geologic structure in central Sweden. We sold that off to them, part and parcel to our business model, for cash payments, royalties, and a nice piece of stock. And we think that they're going to do very, very well. Having the stock payment come to us as part of these deals only enhances our optionality, because it gives us another way that we can win. We can win on the royalties, we can win via the stock ownership, and of course we have annual payments coming in on those as well. The company maker embedded in our portfolio is in Serbia. That's in the TMO Complex. I've got some slides on that one coming up. We'll talk about that. That's you want to own our stock specifically for that asset, not to mention everything else. It has a huge incipient cash flow coming to us. And then, speaking of good cash flow coming to us, the Ballia mine is going into full-scale commercial production next year, and we'll see multiple $million annual payments coming from Ballia once that is in commercial production. Barrack continues to find more gold on the Leeville property. We're the happy recipients of that. This royalty's paid about $14 million since we've owned it, continues to pay every month. And Barrack highlights via the Nevada Gold Mines joint venture. You can see this on their website. They highlight the ongoing discovery within our royalty footprint and also on adjoining properties. And we're delighted to have a royalty on the northern portion of the Carlin Trend, one of the most well-endowed gold regions of North America. And of course, we love Nevada. We have lots of assets in Nevada, dominantly gold focused. One of the key assets we have is a strategic investment. We own 19.9% of the equity of a private LLC that has put the Regent mine in the Rawhide district into production, taking advantage of the infrastructure there built by Rio Tinto. And there's lots of resources left in the high walls of the Rawhide mine, where the cutoff grade has been substantially reduced from the days when Rio Tinto mined this property. That opens up a lot of opportunity for us, as well as the new open pit mine at Regent that has come online successfully. We're pouring about 125 ounces of gold doré a day on this property, and we have a very positive outlook. I will say that we bought this from a distressed seller at $1,400 gold, and at $1,900 gold, this thing looks like an extraordinarily good investment. So I mentioned Ballia. The lead zinc silver mineralization here just continues to expand. The owner, our counterparty there, sold to the owner of the mill. It has a 5,000 ton per day mill. That's another aspect of optionality, combination of infrastructure with an asset that's going to fast track this into full-scale commercial production. And we're looking forward to substantial royalty checks as we head in towards the latter part of 21. Company maker in the portfolio is in the TMO Complex. The TMO Complex is the largest historic copper and gold producing region of Europe. We came into Serbia early on as the first business unit in the company, helped the Serbian government rewrite their mining law, rewrite their concession law, got some of the first licenses in the country. Part and parcel to our business model, we sold those off, kept royalties, got shares in Reservoir Capital when they bought those from us. We then augmented the royalties that we received as part of that transaction by buying additional royalties within the district. So now we have a portfolio of royalties within the TMOC. And the big, huge discovery made by Reservoir in concert with Freeport and then subsequently sold to Nevsun and now Xinjiang, the state-owned enterprise that's advancing this in cooperation with the Serbian government. And it's turned into a very large discovery. The lower zone is 1.8 billion tons at 0.86% copper, 0.18 grams per ton gold. The upper zone's very high grade and is going into production next year. We will receive, according to the feasibility study that was published on this deposit, as well as a memorandum of understanding and the news flow coming out of Serbia, we will start to receive royalty checks in the latter part of next year. So next year is going to be very important to us with respect to growth of cash flow. And that will be a catalyst for continued repricing of our securities, in my opinion. The immense embedded optionality within our portfolio will continue to produce And the team that has built this portfolio continues to add more royalties and more significant mineral assets to our portfolio over time. Strong strategic investment track record has put us in a position where we have $50 million in the bank, no debt, excellent track record of royalty generation, some key royalties that we have purchased to augment that portfolio is all resulting in enhanced cash flow as we look towards 21 and 22. I look forward to speaking with you at the various virtual meetings, and thank you for your time.